If you're going to do systematic, I think like the one thing is just don't have something that will just keep buying top lasting, because when the market's good, your revenue's good, and you're just like pushing prices way too high, which is not good for anyone, because when things revert, you just have people that are down way too much, and you've also not absorbed enough tokens.
What's your take on the token equity situation happening right now? How do you see this unification happening in 2026?
Do you think that is sustainable, or do you see this as, again, just, the yield's never enough, you're going to have to go get more risk, and the yield that you promised to your stakeholders is going to fall through? Welcome back to The Roll-Up. I'm Robbie.
I'm Andy. Robbie and I met at the University of Florida in 2017, where we first found out about digital assets.
We learned a lot along the way, and we're bringing you face-to-face with the leaders of our industry.
Sit back, relax, and enjoy today's episode. Jordi, what's up?
Oh, it is 3 a.m., so I wish it was 11 p.m.
Our 3 a.m. nights, are they conducive to the health? Is this like a polyphasic sleep schedule that we're on, or what's up there?
I'm traveling to Switzerland this weekend, so I'm kind of okay to try to pre-adjust for jet lag.
To the Europe hours. Yeah. Jordi, happy New Year, man. How's your Q4?
I mean, I was happy that things were pretty quiet. I didn't get many Telegram messages over the holidays, so it was the first time that I actually disconnected, and it was just very nice and chill. I went to Saudi Arabia, which is not a normal destination for holidays, but I think it will be in the next few years. Like they're building some pretty nice resorts. And
what brought you out there?
I just ChatGPT'd, where is warm and nice and what are the best places, and it gave me a couple good options in Saudi Arabia. Apparently, they're spending a lot of money trying to make like a Dubai B2, like a second Dubai, and I think they'll get there in a few years.
Yeah, man, I know you're going out to St. Moritz for CFC. Should be a fun week with the lizard people there in Davos, who control the world with their strings and the way that they pull things, and that's clearly Trump is not playing by the rules. So we'll see how Davos goes. It'll be an interesting one this year. There's a lot of economic activity changing globally. We'll get into that. We'll get into some of your token buybacks, 2026 outlook, but let's just recap 2025, man. How was it for Selini? How was your performance? What did you learn? And what are some of your biggest takeaways from the market in 2025?
Overall, I'm happy that we did better than 2024, which was not easy. I mean, most firms and most things did not do better than 24. So it kind of speaks that we've really gotten a ton of talent in, and we were able to navigate even like these choppy situations. Obviously, like some categories did better than others. I would say like venture wasn't like having the best year in history. We made like a pretty big bet on WorldCoin. That didn't go amazingly well with all alts. Basically they didn't overperform, just like, alts didn't do well. Our systematic trading side, it was a mixed bag. I would say like we lost a little bit of competitiveness to like the jump kind of, HFT side, which we're trying to really like aggressively prioritize now. So, number one priority is like just get like the latency and networking and execution really tight. But we did really well with some of these, venues like Lighter. I think we were maybe like the largest volume on that exchange, and did pretty well in the airdrop. So it was a nice kind of end to the year there. And, we survived 10-10, which a lot of people were like, oh, Wintermute's out of business. And then I'm like, oh, the
rumor mill was hot. The rumor mill was hot for sure.
Yeah. I mean, we did lose like, a few weeks of P&L. But, these things are, as long as you survive and you don't give back too much, it's fine.
Yeah.
And some things did really well for us. We're doing more and more stuff on the liquid side, long short, obviously like the shorts have really gone down. So when we track things like unlocks and kind of things that look overvalued, like obviously all of that stuff just kind of went to zero. So yeah, overall it was good.
Good. Yeah, I think 1010 scared the boots off a lot of the perp farmers. It's kind of like made that trade more difficult than it was before that. And if you look at the numbers, it's kind of gone down. We'll talk about perps. So, all right, let's talk about token buybacks. This was like a big thread, a big kind of part of what you were kind of pining on recently. I want to talk about that. I want to talk about health maxing, just like kind of like general 2026 plan. So you put out this post in the midst of kind of this token equity dilemma. Maybe we start here and go into the buybacks as a result of this. So the natural order of thinking in 2026 is going to be like unifying these structures. So it's actually quite funny. Robbie and I have kind of came up with this pro centralization idea as of recent. Maybe it's not the exact way to put it, but you think about how we had all this kind of fugazi decentralization for the sake of regulatory arbitrage. And then obviously with this new administration and regime change in the States specifically, a lot of that kind of is unnecessary now, you could say. And so coming to this, one of the realities is, well, there's a lot of realities that are hitting the market as a result of this, but I think one of them is that the way that these foundation and labs corps have been structured, have been kind of misaligned for incentives for investors, for stakeholders, for participants, retail, et cetera. So we've got this kind of token equity dilemma. And on top of that, you've got these app layer projects being purchased by larger companies and then selling out, kind of leaving token holders with, not claim on that sale, et cetera. And so you've got this dynamic here that is happening. And then on top of that, you've got this token buyback structure. So Jordi, what's your take on the token equity situation happening right now? How do you see this unification happening in 2026? We've gathered opinions from tons of different folks, and there's all these different kind of ideas. There's yet to be a really consensus way, I would say. What's your take here?
Yeah, look, like the main problem for the industry is that every chart is just down only, and at some point, what's happened is like retail has stopped bidding because they're just not getting enough wins, and there's a few structural reasons for that have kind of caused like every single chart to always just go down. Not least of which is not related to buybacks, is more related to like unlocks, and the other thing I've been posting about is you kind of force investors with these like 1-year cliffs. And I think the centralized exchanges love that because they get to launch things where the only tokens are the marketing tokens that the exchanges are getting, so they're the only ones that have tokens, so they're very happy. The exchanges do best. And then you get these like artificially high prices. I was looking back at some of these Binance launch pads from like a year or two ago, and it's just every single like project, regardless of quality, was launching there at like 2 to 3 billion. I mean, I don't want to like name specific names, but you can just go back and look at them, and clearly like these are trading at like 99% down now. So a lot of it was like this like structural reason of like there's not enough tokens. The founders are drinking way too much fucking Kool-Aid. I've been talking about this. Like it's 5% of founders that I've talked to that like will say that their token is like overvalued. Like, to give him credit, like someone like Mike from EtherFi, like they launched at like 8 billion, and he like we're an investor. I talked to him like that week, and he's like, yeah, like this is like dumb. Like what the fuck? Like what are people doing? Like come on, like I love my project, but like we're not. It's not 8 billion right now. Most of them, they just drink the Kool-Aid. It's like, oh yeah, like 20 billion, yeah. And then this concept of like having revenue is good. It's a maturity of the space, and you have revenue to do buybacks. Not many projects have revenue to do buybacks, but you do have some projects that have managed to get there. And there's a few problems. One is the what you mentioned of like, are token holders getting it versus like, is it this equity structure? And I think you have to be very clear on it. And like, unfortunately, like even in the last 48 hours, I've had 2 conversations with projects where I thought that like it was going to be like an equity thing, and then, they're planning to just prioritize equity holders. Um, and it's like, yeah, all these people that bought the token, like
Yeah.
what's gonna happen?
Yeah.
So that's this ongoing thing where I always prefer if there's just like the token should be the equity, and then you get some regulatory concerns or tax concerns or stuff like this that comes back to you. Um, I think, like the US is obviously like right now in a bit more of a tolerant place where you can do, you know, better things. I think an interesting one. So soon there's going to be a launch of something called Fuse Energy, which is a company that has raised at 5 billion on the equity side and has separately raised like on the token side at like 333 million. I think Multicoin led that round as a Solana token. And that's quite an interesting one because it's going to launch as an SPL while, there's like this whole other part of the business that's just making like Web2 money. And
Mm.
it's just like a cash cow. I mean, they have like 440 million ARR, like huge. But then they're launching a token that's not going to be getting that revenue, but then they're going to try to give it utility. So
Yeah.
like you can try to like thread that needle, and you have different investors on both sides. So it's worse than having like a safe and a SAFT for the same investors. You
Yeah.
have like different
Different
investors. So
investors. Yeah.
I I think like, if you do really well everywhere, everyone's happy. That's fine. Like, that's a good case scenario. You just like tokens doing well, everything's doing
Right.
well. Um, but these things are expert kind of like difficulty, nightmare difficulty, things to navigate. Um, and then my last point, like on the buyback specifically, like the projects that we've seen in crypto, the few really like successful ones that have buybacks, like look at Jupiter, obviously
Hyperliquid,
Hyperliquid right
Athena.
now. Yeah, Athena, like I guess they don't have buybacks directly, but the DAD has done a ton of
Yeah.
buybacks, like through the money that they raised through token sales there.
Pump, another
Um,
one.
Pump, yeah, for sure. I mean, I don't know why it's not pumping more, but
Well, this is
of
kind of
course,
your point, isn't it? Right? Is like, is there a more systematic way to approach buybacks than just programmatically buying daily? Right?
right. I mean, I think that targeting, price ranges through some, you know, ratio, either PE ratios or some other kind of like, ways to find out like what is cheap. The simplest way to do it is just like look at the EMA. Like if you're under the average price of the last like 60 days versus over the last price of the last 60 days, and like things are trending down, you want to buy more, things are going up, you don't necessarily need to chase it and just kind of keep pushing it. You can get more tokens out of the market this way. So I think like, for the few successful projects that can do it, there's ways to do it. I took a bit of offense when like, people say that like they don't work. Like,
Yeah.
oh, look,
I saw
things
that
going
post.
down, it doesn't work. I mean, they fucking work, right? Like, they
Yeah.
work.
Clearly.
We know this from like hundreds of years of like, stocks existing. Like they work. It's just like, other parameters that
Well, I mean,
need
in
to
the
be
Jupiter
aligned.
case, that the post that you were referring to, I saw some comments on there, and it was like there was about $1 billion of unlocks over the same period that did like a $70 million of buybacks, right? And it's just you're just kind of like, well, you know, so that math is not mathing here, right? And so from your perspective, right, there's like a more, you're talking about doing this in a very calculated price to earnings ratio based way where you can try to achieve a consistent buyback methodology that is not just purely programmatic based on the revenue of that day or of that week. Um, Maybe you can like walk us through that from your perspective, right? Because you have kind of more of a fund manager style perspective and less of like a I'm a founder managing my token, you know, perspective. Which I think that probably founders want to start to think more in the way that you are rather than in just kind of like doing what the market is screaming at them to do.
Well, I'm happy with like, both approaches, whether it's systematic or not systematic. I mean, you look at like traditional equities, they just like buy back whenever like the board decides that it's a cheap price, and they just buy back their shares, and it's like a very standard thing. Obviously, when you're dealing with traditional equities, if they're public companies, you have disclosures, you have windows, blackout windows, these kind of, like there's all these kind of structural considerations so that things don't get too insidery and too front run. If we've decided that these things are commodities, then it's sort of like, what makes sense. But we're looking at some projects like, I would say, like Lighter and Meteora, that do have substantial revenues, that are taking this approach of, they're not just like doing systematic buybacks, but they're like, yeah, like, there's prices we're gonna buy back our cheap tokens, and that should give some confidence to the market that the revenue is going to be utilized for token holders in some way. I think that's the key thing. It's just like, at some point, you have to either give dividends or give buybacks. I think dividends are totally fine. Obviously, like, they're very normal things to do, and we do have some projects where you stake and you get revenue. I think the Curve kind of crew does things like that. Even like their new token yield basis kind of has this kind of structure. You stake it. If you lock it up for longer, you just get more dividends. I think sometimes those things go into Ponzi-nomics. Obviously, you have the full Ponzi-nomics, which was Olympus down, and you have like the semi stuff like Aerodrome, where it's like, oh, you're locking up and you're getting some other tokens and they're paying your token. Like, it's like this kind of hybrid structure. Yeah, if you're gonna do systematic, I think like the one thing is, just don't have something that will just keep buying top lasting, because when the market's good, your revenue's good, and you're just like pushing prices way too high, which is not good for anyone, because when things revert, you just have people that are down way too much, and you've also not absorbed enough tokens. So, did it look like Jupiter was worth $20 billion at the height of, like, the volumes that were happening during the Trump token release? Maybe, but like, I would say, like, what we've seen in crypto time and time again is that you shouldn't put like a growth stock P ratio of like 30 plus on these things, because the space changes so quickly that, like, there's new perp decks every like year. And so, like, DYDX shouldn't be valued at like 50x P if they have to defend from, like, the new generation of whatever it is.
Is there, right? Because Santiago and Haseeb from Dragonfly, they had this whole debacle where, Haseeb was arguing more like this should be valued almost more like a city or a state, and they had this network model, and then Santiago was taking more of this price to earnings ratio. Where do you fall? And this is less about the velocity of price and directionally getting it pushed higher or lower, but more in terms of the static valuations that maybe something should be valued at, and the efficient market would take it there swiftly. But where do you fall on this as sort of the value heuristic? What is your mental model when it comes to this dynamic? Should we kind of fall on one side of the aisle or the other?
Yeah, I have like a pretty clear mental model that I've arrived to after, like, whatever, 10 years dealing with these kind of tokens. Now my mental model is this: like, you have revenue as like one source, and like future revenue, kind of like a traditional equity, DCF type of model. You have that, and then you have this other thing, which I'll call like, um, it's like this premium for being a good game to gamble on. Like, you go to the casino, and then, like, if they have a fun game and people will just go like throw money at it, they just want to bet. Like, we saw this with pre-markets, where, like, these things just got popular because people were just able to, speculate on something new that was exciting for them. And some of these like things were very successful as just like a novel thing that people wanted to just bet with each other on. And we've seen this, like, now, like, even Polymarket has these, like, oh, what will this thing launch at, over 4B, over 6B, like, all this kind of stuff. I think, you know there is a value to just being like the thing that people will bet on. Like, you'll absorb speculative premium for whatever reason. People will make bets that they know, like, are zero, are like negative sum for somebody, they're just like, oh, I'm gonna win. So it doesn't matter if like, overall we're gonna lose 10% because I'm gonna be the winner, and then they're gonna be the one paying the rake because I'm gonna be winning. And so like tokens that have a lot of mind share and that have a lot of like, distribution for places to bet on, they have a lot of exchanges betting on it. There's a lot of liquidity. There's a lot of like people talking about it. They'll during that period just have this extra premium. And that's what it is. It's not about cities and states and whatever. Like it's literally like, are a lot of people wanting to speculate on what is this thing's going to go up or down, and for how long is that going to be the case. I mean, usually like TGE tokens start really high because there's just like a lot of people betting on what the next week is going to look like, and then there's a new one, and then as soon as there's a new one, the old one goes down because there's just like less people giving it that premium, and that's why you see that premium disappear.
Yeah, I mean, coming to that for 2026 then, Jordi, is there particularly sectors that you're going to be bullish on more so than others from a token performance perspective, and sectors that you're particularly bearish on from, either personal or Selini's perspective, like applying this framework, right, of speculative premium, L1 premium or not, chain app premium, revenue generating tokens? Is it like, where are you kind of looking at for bullish sectors and maybe not so bullish sectors for 2026?
So obviously there's some amount of like excitement about taking traditional companies and like cryptifying them, and giving them stablecoin rails and like potentially giving them a token, especially if that token is actually like collecting the value of what's happening in some good way. I'm very open to that idea. I think the quality of the assets that we have in the space is kind of shit. Like, you look at like the number 10 token, it's supposed to be good. Like it's like the 10th best token in all of crypto. It's the 10th best digital asset, or the 15th one. Like you look at some of the stuff and like some of it's just like this, we have
Cardano
to be having better options than this, like this, or like Doge, or, whatever. You just have like a bunch of stuff, right? I think that equities are winning out because like they're more quality assets, and eventually people have realized that you want something that has longer term sustainability. We will hopefully get some good businesses issuing tokens that represent those businesses and have higher quality assets, and ideally that there's one in discussion that's making me like incredibly bullish, but I can't talk about it. It's like very early. It's not even, I don't know if it's happening. But if you get like a brand that is like globally recognizable and even has like memeability and it has revenue, and you bring that, that's like the sweet spot. So really trying to focus on a few opportunities that can hit all those sweet spots that like imagine like a global brand that will actually like do this. Like you can acquire this company for a lot of money, but then you kind of bring those rails.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Trade on anything: economics, weather, sports, crypto, and more. All on Kalshi.com 24/7 for the world's biggest prediction market.
YEET is built for big moments, the most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. I want to take a guess on like what this could be.
It kind of gives me like Pudgy Penguins vibes, to be honest.
Yeah.
Like not obviously quite a bit, that Pudgy Penguins is quite a bit smaller.
It actually, you're right, because it is like globally recognized, but I kind of get the vibe of like a GameStop, like a brick and mortar, something like that has some memeability. Nike,
OnlyFans.
Okay, I think we got Jordi back. Let's get him up.
Yeah. I mean, I think I was talking about this with the Van Eck portfolio manager in New York last year as well. Like these on-chain IPOs. Yeah, Jordi, we'll get you right back up here. I think you're good now. We're just refreshing you. Yeah, it does seem like there's going to be this pull away from crypto native stuff, if you will, businesses to like these like what would you want to own, right? Would you want to own an altcoin, or would you want to own the tokenized share of a business, right? That's actually, and so I think this is like kind of like the trend that's happening.
I think we're also seeing like the stockification of a lot of these companies. And so if you look at, Jordi said the number 10, but if you look at the number 11, it's
what is it?
Figure HELOC, which is
On
that
like coin market cap?
Yeah. It's number 11 in the market cap. And so
weird.
Obviously this is it's this RWA thing. They're tokenizing these home equity loans. And again, this would be, if crypto didn't exist, they would find a way to do this business, and it would probably go public, or, it would, be private, and then it would go public.
Yep.
And then you could find, this business on a public stock exchange, and you could trade it.
Yep.
But crypto's eating the back end of a lot of these money stacks within a lot of these companies. And so they're tokenizing these companies from the inside out. And I think what we're seeing is like, the first thing that we're seeing is these products from these companies get tokenized, in the sense that, like, first we're going to see companies, before they tokenize their stock or their equity, they're going to launch a stable coin. And like, before Figure goes public or launches its own governance token or network token, it's going to launch this Figure HELOC token, which, if you look, basically just a stable coin. It's just tokenized loans. That, I think, is the first step. And so you'll end up where more and more of the companies in, the NASDAQ or Dow Jones or S&P, more and more of those companies will have tokenized parts of their business, could be a stable coin. And then eventually we'll get to a point where those companies themselves will tokenize their equity. But I think first and foremost, we're going to have more parts of those business get tokenized.
Yeah.
And it'll just look like the top 10 or 15 tokens could just be stable coins or like yield coins. And then eventually I think we'll expand the surface area of the tokenization. We'll expand it from the inside out, going from just a stable coin product that they launched, to tokenizing more and more of the business, the equity, the stable coin, and more parts from there.
Jordi, so kind of hopping onto a different tangent off of the on-chain businesses that you're excited about, which I think, again, is like Hyperliquid caused an entire restructuring of how the space is thinking about profitable businesses on chain. Obviously, the new administration came in. Now we're having token buyback, token equity conversations. That's happening. I think what you're saying is going to restructure the way that a lot of investors think about which tokens to allocate to in the space. Because if you've got these massive brands, as you're saying, with business models, with revenue, and they have a token, well, that puts them in the top 5, like very clearly, or top 7, right? And so, that game's going to change. When we were in New York, you respectfully told me that my infra/DA thesis was just not going to live up to anything. And I was kind of like still a believer in our venture bags. Come 6 months later, I'm absolutely cooked. So you're right on that one. Props to you for that one. Cooked me there straight, looked me in the eye. I was like, you're wrong, buddy. Get your shit together. So thanks for that. But we're also talking about MicroStrategy. We were also talking about this was like pre-DAT. This is pre kind of DAT mania, but MicroStrategy was on. And you had kind of formulated a take around where you see kind of this space going. And then obviously we had the entire DAT craze. Where are we at from your perspective with this part of the market? Is Tom Lee going to get, absolutely BTFO'd, liquidated? Is he going to make it? Like, where are we at with DATs? Take us from like MicroStrategy all the way to like long tail story protocol DAT. Like where are we at in the spectrum from your perspective?
Yeah, I mean, the DATs were another one that I was very skeptical about. And I just knew like these things would trade under MNAV, because you just have a worse version of owning the token, because you have an illiquid like way you can't actually sell the token. And in some cases, the founder is blocking you. In some cases, you just have too much of a token. Like Bitcoin and ETH, maybe you can sell, you can sell like $1 billion if you have, but like nothing else. So thankfully avoided most of these DATs. You know,
That's
we
good.
did a few for commercial reasons, but didn't do many. And the part of the cycle, I mean, look, I did like have a concern that like one, we would get this massive like run up to 200K and this crazy mania, and that would be the cause of it, because we would just way overheat and then we would collapse. We didn't heat up that much. I mean, we did go to like, 130 and ETH went to 5K, whatever, but um it didn't get like too ridiculous. And so even though the bubble burst, it wasn't like a ridiculous bubble. So we've kind of like gone through it. It's the same thing where I was warning like around the DAS event in London, that I had that debate with Hasib about synthetic dollars, and I was warning that like, this thing, people are going to keep like, yeah, you have Athena, but then you have like, people just adding risk to get more yield because it's not getting enough yield, and this is going to like blow up. And people are presenting these things as stable coins. They're like presenting them as dollars. They're pegging them to dollars. I mean, sure enough, like 2 weeks later, you just get like this collapse of stream finance, and that $100 million loss just permeated like through the entire like vault ecosystem of every single exposure of like Elixir had some of this thing, which had some of that thing, and then it's just like this like everyone was like indirectly being touched on it. But thankfully, like what I warned happened, but it happened at like a size before things got like way too big. It happened at 100 million of a loss instead of like a 10 billion loss, like like Luna did. So um bottom line, like we've gone through, where are we on the cycle? Like we've had a few of these bad things that I predicted have happened. Like the DAT's kind of splintered and like this stuff, but it's not catastrophic. And I don't think that you're going to see MicroStrategy or, Tom Lee blow up. In essence, like these things like they still have a bid. They still have cash. They still have participation. The tokens that they're buying are actually like worth something in both cases, like ETH and BTC. So, are they going to be able to buy as much as they used to, a few months ago? Like, no. And that bid's like reduced, but it could come back. And I think like, for those two big ones that you mentioned, the game's not over, and, the assets that they're buying are good assets. And so that game will continue. But when it comes to the altcoin DATs, yeah, I mean, it's just the graveyard out there.
Yeah, it is. And so do you think that these DATs putting their, like, so Tom Lee has staked, billions into ETH now, and then SharpLink has also just recently put a bunch of their ETH into like Eigenlayer and Linea and EtherFi and whatnot. Is this something that is at all interesting, or is just kind of like because like like the trend is, okay, they can't just be holding companies. These DATs need to turn into more productive companies. I guess deploying their assets on chain is one way to do it, but is it enough? Is it interesting? Is it compelling, or is it just meh?
I mean, look, if there are some that are trying to be like proper operating companies and get like actual real revenues and like build business, like do stuff
Yeah.
that's fine. And like you know um like there's like the Aether one trying to do some stuff with compute. Like there's a few trying to be an operating company, and that's fine. The ones that are just like, oh, we're gonna stake this or put it into Eigenlayer, like those yields are obviously going to get compressed, and you can't do it on size. And you know it's not tremendously profitable or interesting to just like do that. And then you can make it more interesting if you take more risk, but then you're just like a hedge fund, and maybe you make a mistake and you like lose money because you're taking too much risk. So um, look, they have to try stuff. I mean, so many people, even like the big names of the industry, even like the Samanis and the Hasibs, who like were initially like very anti-dat, they end up doing dats themselves. So you got the AVAX one, you got the like Solana one, like these guys are on the boards. I mean, everyone's kind of like committed to trying to make the best of the situation, but it was definitely a fever dream. I think now it's pretty clear.
And then On one of your points in there about, the yields aren't enough, you take more risk and then you try to get more yield, and you're kind of selling these as stable coins. Like, I there's kind of this new cohort. One of them that comes to mind here is like USD AI, where it's selling itself as a stable coin, but it's going out and it's trying to do things in a different industry and then bring those yields back to crypto, bring them back to the stablecoin holders. Are you paying attention at all to this new cohort? We're calling it like neo DeFi or neo finance, and these guys are going into like energy. Or we were talking to a protocol yesterday. They're doing reinsurance, right? So they're going out, they're selling insurance to insurance providers, and they're getting their capital base from crypto. And then the products that they sell obviously get revenue, they get yield. They're just passing the yield back to the stablecoin holders. How much do you see that overlap? Do you think that is sustainable, or do you see this as, again, just the yield's never enough, you're going to have to go get more risk, and the yield that you promised to your stakeholders is going to fall through?
I think it's sustainable. I mean, obviously, you need to know what risks you're taking, and there's no free rate above the risk-free rate with no risks. So there are some risks, but there's a place for people to take some risk, and whether it's private credit, whether it's reinsurance, whether it's like financing compute, which will then hopefully have a return. Like these things are super interesting. I think going back to like the quality of like the assets that we have, like those can eventually end up once they're cleaned up and like they go through the extreme cases and they kind of survive, like there can be some decent yielding assets. It's totally fine. I mean, like there's stuff like Wildcat, which gives private credit for any company that wants to just show up and say like, hey, we have our reputation. We're Selini, we're Wintermute, we're, Bodhi Ventures, and this is Kane speaking and whatever. And here's my yield. And obviously they did have one company, I can't remember which one, but they did have like a first default, but that's kind of normal. I mean, that's part of the game. Like you're going to have some defaults. That's why you're getting paid above the risk-free rate. So like these instruments are interesting for sure. And the RWA side has been trying to do it for a long time. We've heard about like real estate yields and different stuff. But there's some interesting things I'm hearing, like people trying to do like data center real estate, tokenization. Obviously Canton, which we've invested in on the digital asset side, is trying to do a lot of just bringing a lot of people on chain and tokenize assets and do it natively in a way that is like representing the real asset. It's not just a receipt. So it's just definitely a space that I think a lot of people are very interested in, and including us.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Looking for yield that stands out? infiniFi gives you just that. Deposit stablecoins and earn far more than the current savings rate. infiniFi is a battle-tested, reliable DeFi platform that is ready to go. Head to infinifi.xyz. Yeah, I mean, we're calling it neo finance. That's kind of that's our focus for this year, is like this category of combination of tokenization, stables, neo banks, kind of the institutional crowd. I'm going to New York again. We have a sick office space in the Empire State Building. We're locking it down. We're doing all these different things. It's very, very focused on this. It's kind of like, it's aligned with what you're saying about big brands coming on chain and launching tokens, but it's in a different way. It's more just like very institutional. And it does seem like that's like the ongoing meta. There's a lot of apathy right now amongst like crypto native participants, but there's also simultaneously like a lot of bullishness and excitement from these like higher level institutional participants, like the Cantons and the teams that they're working with. So that kind of brings me to your portfolio positioning 2026 big game theory guy. What is the game theoretical approach to the market right now from the investor perspective, right? So Trump, Venezuela, QE, Jerome Powell, midterms, 4-year cycle. What is the game theoretical approach to the crypto market right now? What is your current mental model for allocating in the space? How is Selini positioned? How are you thinking about like the risk on versus risk off period here? Your buddy Taiki just closed his ETH shorts for a loss. He thinks that they're going to go lower. He had a fun short spree there. Other people are getting bulled up on going to all-time highs off of a 5% pump to Bitcoin. Feels very PvP right now. What's the game theoretical approach to the market? What's your mental model right now, given the large set of variables in front of us?
I'm expecting this year to be as choppy as last year. So there will be, some big movements up, and then like we'll have some crashes. So that's not going to change. It's going to still be tricky. So my mental model is like you find these spots that are worth accumulating during, and I think this recent in the 80s, it just looked very nice. I think we already came quite a bit off the top. We were super lagging traditional markets, including things like silver and like palladium, whatever, all platinum, all this kind of random stuff. People are like shooting up to the moon, and it's just like a situation where you can easily see like a bit of a catch up trade. That said, like I said, alts are kind of broken for the most part. You just like have unlocks coming, for most of them. The major L1 tokens, I think, never really managed to explain why the token should be worth anything apart from just the fact that it has that speculative premium of like people want to bet on it that I mentioned. So like even like the large L1s, I think, are not necessarily like super clear long-term holds. So we don't actually hold much ETH or SOL. We hold a little bit, we participate in like the trading, but we hold a lot more BTC as a macro asset that I think is very relevant for today's world. We're definitely tracking the quantum thing. And when I say the quantum thing, I don't really mean like the actual quantum as much as like people's perception of what could be a quantum thing. Like are people, I watch like these like clips on like CNBC or MSNBC, whatever. Like I want to see like what the normies are talking about. And they mentioned it. Like they mentioned, you got the guy, the random dude coming talking. And then they mentioned quantum for Bitcoin, and they're like, you're a little bit scared. Like they're just kind of like looking at it. So,
That's so good, man.
and I think it's a good thing that they're kind of climbing that wall of worry, because once things calm down and nothing happens, we'll be able to kind of have people come back in. So you think about positioning when you see that, and I think positioning might be low, and people might need to position more. And the main risk, like you said, is that we just get like a collapse in like equities, other assets, and then that would obviously like hurt crypto prices. So midterms, I am expecting Trump is gonna aggressively try to juice things, either by doing some kind of airdrop check 2K to people, or some getting Stephen Moran in place of Powell or something. So he's going to try to do something. So I do expect we'll get a liquidity surge around the mid-year, and that's going to be like another buying opportunity. So TLDR, like long right now, mainly Bitcoin, some select alts that have just like sold off way too much, especially the ones with revenue. So we do have some of the ones that I mentioned, like all the ones that have revenue. We have like a basket of all of those things now that they're kind of at reasonable prices.
Yeah, I remember you were telling me like, Hyperliquid at 40 or 50 here. Like, is it that interesting? Or you were kind of like, man, I was like, dude, it's gonna go to the moon. And then it went to 60, and then now we're back at 20, and it's like, okay, now it's kind of interesting again and lighter. And then you got like Sky, Maple, even Aave after some of the drama, Jupiter, these types. That's kind of like where our focus is. What's that?
Meteora as well. I mean,
Meteora.
Meteora is very cheap on like a revenue basis. So, yeah, we just have a basket of these things. I like LayerZero as kind of like another one that is like a dark horse. I think like they're really starting to get some stuff together, and they've undoubtedly won the war when it comes to like some of these categories. Like the OFTs and like some of these things. So.
What about privacy, Jordi? Are you excited about Zcash as much as Arthur Hayes and Mert, or not so much?
No, I'm not. I mean, I'm excited about Canton, which has privacy, and I think the things that might enable. Less kind of like forms of money like Zcash that are trying to like meme themselves. I was also like I felt the same way about Bitcoin in 2012 when I first heard about it. I'm like, are they really gonna meme something like into money? Like, I don't know. And then they did. So like I could be wrong again.
I know it's getting late over there, but just curious because we've heard it come up, and I think they will come on the show. But why are you bullish on Canton? What's your Canton thesis?
I it's the same with Lighter. Like I like the combination of like a founder that is able to go to these like TradFi institutions, these big guys, and like sell them to collaborate and bring them on. And I think Yuval has that ability to just go to a Citadel, go to these guys, get the banks on, get these guys on. Okay, like we're doing some interesting stuff. You got privacy, we have the credibility, we have the other names, and then you just kind of get a bit of a group going, and then before you know it, like other people want to come in because of the other people are in, and that's a good way to do things in the world. It's very different than the Hyperliquid thing. I like what Jeff is doing, this like neutrality thing of like we're just like gonna put the infrastructure and it's just code and anybody can deploy, and that's also cool. But like I think you want to be barbell. You either just do like pure infra, like neutral, or you go like, okay, we're really good at like showing up and doing partnerships with all these guys and building this stuff. So they've been building this thing for a long time, and I think at this point there's like so many investors that are in. They've thought about the privacy aspect. They've thought about like issuing actual native securities and like the legal side a lot. Obviously, like when it comes to things that we're used to on the crypto side, like MetaMask or EVM or some of these things are different. So like that's probably like the main thing that they need to overcome and kind of think about how to make like the UX, let's say, like kind of more friendly.
What do you think about Chainlink? They've done all the things that Canton has done. Sergey is, one of the best founders in the space. Token just can't seem to get a bid sustainably over time, even though they are probably the most important kind of like DeFi TradFi connector right now. Like, do you see these types of fundamental companies like ascending into the higher ranks of like top 20, top 10? I mean, Chainlink's already obviously up there. Like over the 5 to 10 year period, or like do these companies have to work on like does Chainlink need to work on its token more than what it's currently done, basically, is what I'm getting at? Or is just the fundamental work that they're doing and business that they have enough to kind of allow them to basically outlast everyone? Because I think it's really a game of outlasting more than ever now. How do you view like a company like Chainlink or those that are kind of similar in the space where the token value is still, in that kind of utility-esque realm? They've kind of got some buybacks going with the Link Reserve, but nothing like programmatic or like massive, massive programmatically, like something like a or Hyperliquid.
I mean, look, like I'm not a Chainlink expert. One of the reasons is like it just never was interesting for me for like looking at it from either a long or a short, because from the long side it was just always so expensive. Like I could never like really justify why this thing's trading at like many billions. And then from a short side, it's like there's much less real like there's like more vacuous shit to short than like something that at least is okay. So I didn't look at it from a short side or a long side. I just haven't like dug into it too much. But I will say that like some of the categories that they try to compete on, like the bridging and some of these things, they're not necessarily like winning in all of them. And so I guess like, there's oracles, but now there's like, people are not really like using them for most of these like financial oracles. Now they're using like Pith, or they're using, something else. And so I'm not exactly sure. Like I'm not the expert on Chainlink, I'll say.
All right, guys, quick rapid fire, and then we'll close out here. Jordi, Bitcoin above or below 150K and end of the year?
Given where we are, I would say like close to, but probably like a bit below.
Yeah, Sol above or below all-time highs, around 280.
No, it's definitely below. I mean,
Yep.
like
Yep.
it's not gonna get close.
Best quarter of the year, Q1, Q2, but
for crypto in general, yeah.
Yeah, so best performing quarter.
I think Q2.
Q2.
Biggest sleeper like narrative or sector that people aren't talking about right now that will be hot. It was privacy in Q4. It was Hyperliquid and perps back in 2024. End of that year. It was the AI agent meta. What is it this year?
I like I said, I think like getting some like real businesses as a tokenized asset, whether it's they're fully tokenizing the whole business, or if it's just like equity perps becoming really hot. I just think that people are going to want to bet on things that have like a real business.
Yep. Jordi, thanks for your time, man. Get some rest. I look forward to hearing about what comes out of CFC and seeing you in the city as well soon, man. Oh, wait, hold on. Before we finish, can we just have a quick couple minutes? What is the health maxing journey? Can you just give us like the 90-second TLDR? Like, what have you been up to?
Yeah, I mean, obviously, like I've been, anyone that's dealt with me over the last years is just like, dude, like, how are you fucking online 24/7? Like, you don't sleep. You're always like, and I've just been pushing like very hard for years. And at some point, I think it just, I hit 40. The anxiety of like trying to run this big business and everybody, it just started to creep up in health ways that I didn't, realize until it like really hit me. So I just started prioritizing, and I think that the approach is you just need to like layer habits. And why habits? Because like habits become automatic, so you don't have to like think about them. They don't take your brain space. So if you just have like a healthy habit, you can move on to the next one. And then you just like stack them. And so like I started with something that was very easy for me, which is diet, just because I've always kind of been diet conscious. And then exercise, obviously, like is something that we lazy people like, or busy people like me, like sometimes you lose the slot that you're supposed to have. Prioritize that. And then I would say like the latest one I've been successful on is sleep. I'm quite happy. It's like the first time in years that I'm having like 7 hours a night. So I feel good. And then there's a bunch of other stuff like just stress. If something is just like very stressful, I don't even tolerate it. I sort of just cut it out. And then the last thing, of course, is things like supplements. And I've gone very deep in that rabbit hole. I'm a bit of a nerd when it comes to this stuff, because I like to take information from like a lot of experts. Like what I've always done well in my life is like there's a lot of economic projections from different people, different experts, and I just take it all and I just distill it into like here's the most likely correct vector out of all of this like noise. And so I've been doing that for a long time with people used to take you should take the goat weed thing. It's gonna increase your sexual endurance, or you just hear a bunch of random shit, right? So I've been doing a lot of trying to like clear up the noise. And sometimes you have to take stuff that like peptides are they're not FDA approved yet. You got to like figure out what it makes sense. And I think I'm pretty good at that. So I've gone down that path. And at some point I think I'll try to give people like the, not the TLDR, but like the long form like write up of what I found.
Awesome. Yeah, I took some ashwagandha to sleep recently, and it's been super great for sleeping, for endurance, all of that. Yeah, man. Good. I'm glad. I think you'll perform better in the markets, in life in general, feel better, be happier, right? And as you said, the big 4-0 for us. I mean, we're 15 years behind you or so, 14 years behind you, and so for us, it's more just like don't have 20 beers, have like 10. And then get 7 hours, you know? It's like, you know, don't do the whole concoction, like do like a very small bit of fun and sleep and then work out and get some sun, right? And but as you progress, it becomes more and more, you know, you have to be more specific with it. So
yeah, the only good, I mean, obviously like your body's less forgiving, but the good thing is like you start becoming I would say like more disciplined, and you have more like, you know, data points, more knowledge. So in some ways it becomes easier as well. In some ways harder, in some ways it actually becomes easier as you age.
yeah. Jordi Alexander, thanks for your time. It's been an absolute pleasure, guys.